kind of macro challenges that we are seeing right now globally. So do you think that in this kind of scenario, India is really a port in the global storm?
Well, they say the proof of the pudding lies in the eating. We have seen from 2008 to 2011, despite the fact that much of the developed world is engulfed in the downturn. India and China are the two countries which have really escaped the whole process. I see no reason why the pattern of this trend would anyway be affected in the future. Well, after all, the problems in the Western world would continue for a few more years, but thereafter the recovery would start. India has been able to insulate itself from the global downturn so far. I don't see any immediate signs of the global downturn, this process in any way to be reversed in India. I'm not worried very much about the India's economy faltering as a result of continued downturn in the global economy. As an economy watcher, I am very concerned about the inflation, because if our growth is in any way going to be affected, it is going to be not affected by the global trends because of the domestic trends. The domestic trend that is the most worrisome feature is the inflation. And to my mind, the inflation is largely attributable to the fiscal deficit. Even though I'm not talking about the budget deficit per se, the real deficit which the government has is reflected in the heavy borrowings which the government is making in the market, which has the effect of really bolstering this inflation figure. To the extent that Reserve Bank of India is coming forward with this remedy of high interest rates as a way of controlling this inflation, so far it has not worked, and I see no reason why it should work in future. We need to have a fine balance between the interest rates as also the fiscal deficit. Unless the fiscal deficit is addressed, I don't see how we will be able to avoid the inflation of this order. Certainly, I think the inflation of this order is totally unacceptable and will really be detrimental to the growth of the economy. For a very long time, we have been talking about getting a control of the fiscal deficit. And in the initial years of the economic reform in the 1991, that was a key element of our economic strategy of bringing down the fiscal deficit. I think we put a target of about 3.5%. But really we have not been able to adhere to this target for a variety of the reasons. Unless we get control over that situation, we will not be able to really make a dent on the economic growth. Merely by pursuing a policy of high interest rates, we are only hurting the economy. We are not benefiting the economy. So the clue really lies in controlling the fiscal deficit.
So where exactly do you think the government has lacked in terms of controlling the fiscal deficit?
My own view is that a very substantial amount of money that is being spent by the government in what they call the anti-poverty measures in trying to benefit the rural sections, which is in a way laudable, because that's something which is unavoidable in the present context, where we are not able to bring about an economic growth which will benefit the poorer sections. And particularly in the context where the economic growth has benefited the urban middle class, to leave a very large chunk of the rural population discontented is not in the interest of the country. So the government, for its own reasons, have really spent a lot of money in what one would loosely call an unproductive expenditure of trying to provide the subsidies to the rural people. Frankly, it requires a very imaginative policy on the part of the government to bring about a shift in the situation. So a situation like the rural subsidy, fertilizer subsidies, food subsidies, all these things we have been talking about for the last 15-20 years, but we have not been able to make much of a difference in the situation because of the what I would call prevalence of a political situation which does not favor a very bold step in that direction.
So talking about the banking sector for some time right now, considering that you're a veteran bank, do you think in terms of the norms laid down, are they too strict?
No, as a general proposition, I mean, it may be very unpalatable, but I am totally opposed to compelling everybody to go in a particular direction. Saying that I think this is what the Reserve Bank of India is doing, the existing private sector banks and also the new private sector banks, compelling everybody that they should lend money in agriculture, they should do priority sector, they should open rural branches. Frankly, I think each branch should concentrate on its strong areas, and that's how the banks can grow. That's why the financial system can grow. Would that mean that the rural areas will be completely neglected? Surely, I think there will be some entrepreneurs who would specialize in banking in rural areas, and by adoption of the right technology, they can make the rural banking a profitable one. But I see no reason why everybody should be compelled to go into the rural areas. That doesn't appeal to me as an appropriate step.
A lot of private equity funding also went to the so-called microfinance sector. We saw a lot of action with SKs getting listed and so on. What exactly do you think went wrong with the private sector in India? And what exactly do you think that perhaps private equity investors or the stakeholders could not make the piece right?
So microfinance has got a very limited role that is not getting accepted. In a sense that it is catering to a very small segment of the rural population, the weakest section, and it has only one product to offer, namely that a loan based on a group guarantee. I think there are limitations to this whole model. But what went wrong with this system is because of the fact that to meet the operational costs, they went on jacking up the interest rates. In a country like India that is bound to attract a lot of backlash, that is really what has happened, that came up with, Andhra Pradesh came up with a legislation which hurt the microfinance industry. Microfinance has its uses, but I think we have to go way beyond microfinance in order to make the rural scene a very different one. I think we need to think the whole matter through afresh. And microfinance is not the only answer to the regeneration of the rural economy. It is dealing with only one small and minor aspect of the rural economy. I recently gave a speech in the Talwar Memorial Lecture where I spelled out my whole, I won't call it a recipe, but some sort of a very general solution to the whole problems of the rural areas. In effect, it would mean I'm really looking for thousands of non-banking financial institutions to come up in the rural areas, which are catering to a limited geography, but which covers every household in the villages, providing them a multi-product solution and based on a very high level of technology from the point of view of the delivery, understanding of the client's needs. These are all of vital importance in trying to cover the rural scene.
Private sector participation to NBFCs.
Yeah, private sector participation. There I see a very important role being played by the private equity players, because those, adoption of the different type of technology and covering, achieving a scale of operation in a limited geography, these are all factors which will contribute to the profitability of the whole system, and private equity players will find it a very attractive form of investment.
In terms of the kind of monetary policy that's coming right now, what's your prediction in terms of what are you hoping?
Since I am not in the scene, I cannot make a prediction.
So what exactly do you think you should be according to you?
Frankly, I have already indicated my bias. I am not a high interest rate bias person. I have been a development banker and I have been a banker all through. I want the development to continue to take place. We haven't reached the stage of maturity in our development. So to fight on inflation, to adopt a high interest rate policy is only hurting the economy. I believe that increasing the interest rate is not a solution.